Good morning. Welcome to Stock Market Today. It's Monday, April 20th, 2020, and I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. You can find me on Twitter. I'm at Dan_Russo_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today, where you can sign up for a free email where we get a lot of the content for this show, as well as get daily stock ideas to consider. That hits your inbox every trading day before the market opens. So hopefully everybody had a great weekend as we get back into it now. U.S. equities finished higher in Friday's trading, rallying to finish near the highs of the day. That Dow, S&P, and NASDAQ posted their second straight weekly gain. All sectors were higher on Friday, led by energy. Treasuries were mostly weaker with the curve steepening. The dollar was down on the major crosses. Gold finished down about 2% in WTI crude, down a like amount in choppy trading. And as we get to the desk this morning, futures are down a little less than 1%, about 0.7% after back-to-back weekly gains for the first time since February. Asian markets were mostly lower overnight, led by Australia, though China did manage to buck that trend and close higher. European markets are mixed. Treasuries are mostly stronger with the curve flattening. Dollar is stronger on the yen, but lagging on the euro cross. Commodity currencies are under pressure as oil is down close to 8%. Now, there is some nuance to that oil being down. The front month contract is beginning to roll off, and folks are thinking about rolling out to the next month. So that could be at play with a lot of the weakness that we've seen in crude overnight. Gold is down about 10 basis points to get us going during a new week of trading. So we're wondering, will the 61.8 retracement level be in play this week? Here's the S&P 500. Finally powered through the 50% level. We have the 61.8% level up at 29.32, and it is a heavy earnings calendar this week with nearly 100 names getting set to report earnings on the week. After earnings got off to a somewhat disappointing start last week with the major financials. We'll see what happens this week with some of the big earnings announcements that are slated for the week. 2650 is initial support, 2450 below that. Resistance in the 2900 to 2950 zone that does hold that 61.8% retracement level. Now, we do remain overbought in the near term based on a 13-period CCI and the 3-day moving average of that metric. Chaikin money flow is bullish and has broken the downtrend line. So that's one bit of encouraging sign from the indicator standpoint. So call it a mixed bag on the indicators as we enter. It seems like every week is an important week, and they really are. And this week is no different, with a plethora of earnings announcements ready to be released this week. So monitor that level closely. I think in the near term, the risk reward skews more towards the downside for equities. Let's hit our market in a minute now. What are we writing about in the note today? Well, SPY has a confluence of resistance as earnings season continues. I touch on this in my note, with some of the resistance levels that are beginning to come into play following that rally off the March 23rd low. Small caps continue to lag large caps. IWM actually was lower on the week. It bucked the trend of the major indices and closed down on the week. Treasuries consolidate in an uptrend. I have an upside bias in my view there. Gold's trend remains bullish but extended, and as I said, futures do point to a lower open here today. Now, looking at the power bars for the major indices, the Dow added nearly 3% on Friday, 5 bulls and 9 bears there. So continuing to improve. S&P 500 up 2.68%, 55 to 147 bulls to bears there. NASDAQ was an underperformer on the day, 21 to 24 bulls to bears, as some of the big leaders over the past couple of weeks succumbed to a little bit of profit taking on Friday. Small caps outperformed. Generally, the commentary around plans to reopen the economy lent a bid to some of the beaten down areas of the market. Small caps went along for that ride. 180 to 391 bulls to bears. Their bonds down ticked. Energy, again, playing on that same theme of beaten down areas of the market, rallying on Friday. Energy up 10.5%. 0 bulls to 14 bears, though, if we look at the XLE, as the fundamentals there remain uninspiring. According to the Chaikin Power Bar, small cap stocks and large cap stocks remain bearish. Let's hit our stock of the day now. Some featuring in my note. The industrials saw their Chaikin Power Gauge ETF rating turn bearish over the weekend for the start of the new week. So I started drilling down on some names there that kind of play on that bearish theme, and Copart fit the bill. CPRT, the ticker symbol there, very bearish Chaikin Power Gauge rating with a weak trend below the declining long-term trend line and part of a weak industry group. Now, if we look at the power gauge metrics, the 20 factors, 5 in each of these 4 categories, the financials are very bearish, earnings are bullish, technicals are bearish, and experts are middle of the road. But we roll up the 20 factors to come out with that very bearish rating. From a technical standpoint, what this looks like to me is a bearish flag, right? We have the downtrend and then this kind of upward sloping consolidation. We want to watch the break. I think the kind of $68 to $70 level becomes important. But we have a very bearish stock underperforming the market. Chaikin money flow is fading and on the verge of going negative as the overbought, oversold indicator rounds out of an overbought condition and begins to head lower. So, if you played the rally in Copart, this might be a good spot to take some off the table if you're potentially looking for some bearish ideas here after the market has staged a big rally off the lows. These are the types of names you want to look at. I mean, just look at the intensity of underperformance as the market's rallied. The intensity of underperformance here has picked up. So Copart, certainly a name I don't want to own. May want to potentially look for opportunities on the bearish side of the coin if you do trade that way. But it's an interesting name. I'm highlighting it in my note to Chaikin Analytics clients today. Let's look at our sector tracker now, the movement of the major sectors over the last 5 days. Healthcare, I mean, we've been talking about it for a while as one of the leading areas of the market, and that does continue to be the case. Discretionary solid over the past week. Thank you, Amazon. Amazon big weight in the discretionary group, and that has had a strong move over the past week, notwithstanding some profit taking on Friday. Technology also at the top of the list, right? A lot of the big growth names reside in technology. So that group has been strong over the past week, as that has been leadership from a thematic standpoint. Staples and comms round out the list of sectors that are higher. Comms also have a lot of those big names like Netflix and Google that have done well over the past week. Energy, industrials, and Utes are middle of the road. Do expect energy to continue to be under pressure. However, materials, REITs, and financials are at the bottom of the list, with the financials obviously having the headwind from declining interest rates, as well as just, disappointing earnings announcements. And speaking of financials, if we shift over to our industry in focus today, it's regional bank services, which is really underperformed over the past 6 months, lagging the S&P 500 by 32.5%, and that power bar ratio hints at more to come. 0 bulls for 25 bears. It's currently ranked number 21 of 21 subsectors in that group. So some of the indicative stocks there: Community Bank System, CBU, Southside Bank Shares, SBSI, and Bank of Hawaii, BOH, all hold very bearish Chaikin Power Gauge ETF ratings. And if we take a look at KRE, the ETF that tracks the group, it does have a neutral ETF power gauge rating, but the trend is weak below the declining long-term trend line. Again, here's our power bar ratio: 0 to 25. Bulls to bears, precipitous decline, bit of an upward sloping consolidation, not dissimilar to what we saw in Copart, but intensely underperforming, right? So it's a combination of rating and relative strength, and the relative strength just has not been there really since the beginning of the year. Persistently bearish money flow, turning bearish once again. Overbought, oversold indicator for the fund, rounding out of an overbought condition and now heading lower. So you can see the pressure and how, based on the weight of the evidence, that pressure is likely to persist here in the near term. Just not interested in dipping a toe into the banks just yet, especially the regional banks, especially with an upside bias that I have towards the price of treasuries and downside bias in yields. Let's take a look at what's trending now. Yesterday's S&P 500 movers and shakers, or Friday's rather. On the gainer side of the board, Holly Frontier up 17% with a bit of a rebound. Same with MPC, nothing company specific to drive trading there. CFG, Citizens Financial, earnings announcement did send that stock higher by 15.6%. CMA, nothing company specific on Friday. However, they are set to report earnings tomorrow, so keep that one on your radar screen after a 15% plus pop on Friday. And Valero caught a bit of a rebound. It seems, Friday with that energy energy rallying 10%. These names like Holly Frontier and MPC and VLO went along for the ride. It's still hard for me to get excited about the group, as you've heard me say numerous times, not just recently. It's been over the past few months where I've been kind of pounding the table, saying to avoid energy. And if you did that, and if you looked for bearish opportunities, that probably helped you through the downturn. Now on the loser side of the board, Netflix. Netflix was initiated with a sell rating at benchmark. Netflix has had a big run of late, so some profit taking there. Maybe the initiation was an excuse to get behind that. Rating there is neutral. United Healthcare, some profit taking in that group. Remember the managed care companies had a big day on Thursday, so giving back some of the winners seemed to have been the theme on Friday. United Healthcare down 2.6%, CNC, Centene down a little over 2%. EA, Electronic Arts, largely a beneficiary of kind of the stay-at-home trend. That trend did come under pressure on Friday, some profit taking there. Electronic Arts still has a very bullish Chaikin power gauge rating, so one to keep an eye on as far as I am concerned. And Take-Two from the same group, although Take-Two does have a neutral rating. EA down 2.5%, Take-Two down 1.8% on the day on Friday. So let's dive into the charts now. Small caps sit out last week's gains. All the major markets were higher last week with the exception of small caps. If we take a look at the IWM, the iShares Russell 2000 ETF, what we can see is it's a little bit busy. I apologize for that, but I wanted to make the point that you have the Qs have broken through the 62% retracement level. S&P 500 is close to testing the 62% retracement level, and here's small caps struggling to get through the 38.2% retracement level, way down here, below a declining 50-day moving average, closer to overbought than to oversold based on that 13-period CCI, and in a downtrend relative to the S&P 500. That's a trend we've been talking about for some time. It picked up steam as the market sold off, but what's interesting to me is we're actually seeing a little bit of a stabilization down here. So we don't remain dogmatic in our views. I'm open to new ideas. The trend is still very much down, right, notwithstanding this near-term rally for the IWM. The ETF power gauge rating at Chaikin Analytics for IWM is bearish. We touched on the ratio a little bit earlier in the show, but I am watching this relative support and see if it could continue to hold. Ultimately, we'd love to see a break through the top side of this consolidation. Otherwise, it's really just a consolidation in a downtrend, but something we want to remain open to as the week and weeks progress. But hard for me to get excited with the IWM holding a bearish ETF power gauge rating and struggling to get through that 38.2% retracement level. Treasuries continue to consolidate, and what's interesting to me is that with the big market rally off the March 23rd lows, it's not like we're seeing a huge rotation out of treasuries here. The iShares 7 to 10-year Treasury bond ETF has a very bullish ETF power gauge rating at Chaikin Analytics. And what I see is this consolidation here above the 50-day moving average, above the 200-day moving average. CCI 13, closer to overbought than to oversold, really kind of replicating the consolidation that we're seeing in price. And on a relative basis, treasuries are pulling back, but above the breakout level relative to the S&P 500. So we've had this rally in equities, which has led to a bit of underperformance by the treasuries. But the treasuries, from an absolute standpoint, are not exactly falling out of bed as equities rally. So that's just something to keep an eye on. For me, I'm watching this downtrend line off the highs. A breakout here argues for further upside. I do think that this consolidation does ultimately resolve to the upside. As you can see, we do have that very bullish ETF power gauge rating. And then finally, gold is a bullish trend, but extended. We talked about this last week, and gold pulled back over the course of the past week. Now testing near-term support at the recent breakout level above the 50-day, above the 200-day. Here's bigger picture support down here around 1575, rounding out of an overbought condition. And as gold kind of consolidates and pulls back, it's interesting to note that GDX, the gold miners, are bumping their head on resistance. So we'll see how this resolves. This trend is ultimately higher, but some consolidation in the near term. That'll wrap us up for today. I hope that everybody has a great Monday.